Gagan, and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Today's guest is a master of the aviation class of business, but he's also a well-known and respected market figure across classes, holding key positions in market committees and international insurance trade bodies and non-insurance organisations alike. Bruce Carman has been a leading aviation and war underwriter since the late 1980s, and after over 30 years at the heart of the Lloyd's market, started his own specialist MGA, Hive Underwriting, in 2017. That business has grown rapidly and has begun to mature and scale, and so now seems an excellent time to get Bruce on the show. The aviation market is in a fascinating position post the Russian invasion of Ukraine, and part of our talk will be an incredibly useful listen for any generalist who might feel that aviation is sometimes a specialism too far for them. But that wouldn't be doing justice to Bruce and this discussion. Listening back, what this podcast is really about is examining the art of becoming a good and highly focused underwriter and insurance entrepreneur. Bruce is incredibly good company and is very generous with his time and insights. My overriding impression is of someone having the time of their life. Bruce is someone who's been given the opportunity to start from scratch and be fast-paced and nimble in applying the best practices and technology available today to a lifetime of frontline, high-performing underwriting experience. I highly recommend a listen. Enjoy the podcast. Bruce, welcome to the Voice of Insurance.
Mark, thank you very much for having me.
It's really, really good to be chatting with you. I've met you a few times in the past, but it's nice to now get you on the record. So anyone who's listening who doesn't know you, give us a bit of a potted history of your career to date.
Well, I'm Bruce Carman. I am the founder of Hive Underwriting. I call myself the Chief Underwriting Officer, but I probably do a few other jobs at the same time. And my background was erratic, if I'm honest, because I wanted to be a marine biologist. And when I didn't get the chemistry grade I needed for university, I resat my chemistry at Carman. I then waited for the term time at the university I was going to and got a job in the city. That happened to be an insurance company, and I thought I could make some money in the city before going to uni. I ended up working at a company called Sphere Drake in the ILU.
Goodness me, yes. Well, I remember Sphere Drake. I'm sure many listeners do. It would age them. They would have to be over a certain age to remember Sphere Drake.
I think so. That was 1987. I spent 10 months there and tried to get into banking, actually. I saw a load of my friends from school who were making so much more money in banking. And I had a couple of offers right about the time that the crash happened. And I think it's fair to say that desks were closed, including the ones that I was offered. So with that, I thought, insurance looks like a steady option. So looked at Lloyd's. And in fact, it was that Thursday that Emmy Denby and others was advertising for a box assistant in Lloyd's. And I thought, okay, I'll go and interview for this. So I was interviewed by Mark Denby, Christine Dandridge. And they were upset that I had to wait, I think it was a month for notice period. Now, can you imagine that in today's day and age? Mm-hmm. 1 month's notice period, which meant that I couldn't help them with the renewal season at that time. So I started on the 8th of January and I was there at Atrium for 27 years.
Wow. And so you didn't get to do your marine biology degree?
No. I always thought throwing a Punnett Square on the Great Barrier Reef was going to be a great idea. But actually, in the end, it's a case of just going on holiday to the Caribbean or nice locations for a dive.
So you ended up at Atrium, how many years?
27.
27, goodness. So what gave you the idea, that drive to go and set up your own business in MGA?
Interesting, because Atrium, I left after 27 years because I'd nurtured a team. They'd become incredibly good underwriters beneath me, great traders, and they were a little bit crowded, I would suggest, with me above them. So they needed more space, and we were promised that with the move, or I certainly moved, and others seemed to end up in the same place at Cathedral Underwriting, who had just been taken over by Lancashire. And that's where I ended up, set up the aviation and aviation war team there. And again, it was a case of, okay, I've got the team, they're the underwriters, what am I going to do? And when there wasn't space for me in a role above that, it was a case of, okay, I better start looking around for what I could do. I look at what my skill sets were, what enthused me, and where I could make a difference. And with that, I looked at potentially joining another carrier, one of the larger Lloyd syndicates. A couple of them out there were options. And I also took a look at the delegated world. I had underwritten for third party, both through proportional risk and through consortia for a number of years, since 2001, actually. And with that, you would have thought that delegated was an obvious, but I knew nothing about MGAs. And that's when I just happened to be sitting at an awards dinner. Hasten to add, I wasn't receiving one or even handing one out, but I somehow was on the table where people were. And I was sitting next to the then CEO of the MGAA, the Managing General Agents Association, Peter Stadden.
Peter Stadden, yes, absolutely.
And Peter said to me, you need to speak to Charles Rowley, who had just set up DA Strategy. And on meeting Charles, it became very clear that he is a subject matter expert in the world of MGA and the world of delegated underwriting, having previously been head of delegated underwriting for Catlin. So a phenomenal brain to tap into and to learn a little bit about how MGAs work and how they were set up. So I started working with him.
But had you always had an ambition to run your own business?
Probably not is the answer. That scared the living daylights out of me. The thought of it at the time. I think the extraordinary thing was that whole leap of faith when you walk away or you're walking away from a monthly paycheck. You're not going to get that monthly paycheck and the benefits that come with that company. And walking away from that kind of security was the biggest threat to me in setting up Hive. And actually, it was the incredible support that was shown to me by my girlfriend, Carman, who said to me, do it, I've got your back. And that, to me, I think, was probably the tipping point for me as opposed to becoming another wage slave.
Well, surely you've been very successful. You must have had a bit of savings you could buffer up.
I might have had a buck or two in the bank. I think it was also the fact that Clive Washburn had been a long-time supporter on our proportional treaties and consortia of old. Clive shook my hand and said, I'll support you. And, that was great. And I then had a good broker friend, Colin Sharman. He helped secure supporting capacity together with Beasley as the lead.
So you knew you had a business then?
Yeah, but it wasn't off to the races and easy. I constantly say to people, I'm now in the garden. I didn't show my face in the city. I'm fighting Michael Bublé in Starbucks and Pret a Manger and Costa Coffee, at a time when there's sleet and snow. And it's not the world's smallest violin I'm getting out here, but it was a really tough time when you don't have an office, you don't know where you can be. You get up to a meeting in the city and someone says, I'm sorry, I'm going to have to cancel, at which point you've then got 2 hours spare, kicking your heels till the next one, feeling a little bit of a down and out. But no, you get through those hard times. Funnily enough, I charted every meeting, every person that I met with. And I guess my OCD brain at the time probably meant that I was overthinking everything. But the questions I had really for Charles at the time were things that underwriters and traders don't really think about because we take for granted in the entities that we work for. And the things that were causing me sleepless nights were the skill sets such as compliance and governance, the finance and accounting, recruitment, HR and benefits, the office space and the IT systems. Now, tell me how many underwriters understand how those things work. And when you talk about setting up, of course, there is the option to incubate, and you can go with people who will help you and assist you in that growth and have all of those good things ready for you. But it was only when I created the Hive mind map of my universe that I could then sleep, because a picture speaks 1,000 words, right? And once I put it down on paper, I knew that it was in the box. I knew it was done, and I knew I'd got it sorted, as opposed to worrying about all of these unknowns.
So it was about 5 years ago? When was it? How long?
It was actually 2017.
Goodness me, time flies. So 7 years ago.
Yeah.
You're in the 8th year now.
We 8th year of underwriting, absolutely.
Hi, I'm Max from the Insurance Network, organisers of the TinTech series of conferences. Here's Phil and Jeremy from Tin to tell you about a new event in the Insurance Network calendar, the Data Jam, on November 28th at 133 Houndsditch.
This one-day event explores the implications and opportunities of data, analytics, AI, and automation for all sectors and business lines within UK insurance.
It's a packed day full of keynotes, panels, workshops, and networking sessions, with 25 breakouts, panels, workshops, and discussion pods you can choose from.
Sessions include developing an effective London market data strategy, data readiness for generative AI, integrating and enriching third-party data, data standards and governance, and enabling digital underwriting.
Lots of breaks mean you can network and benchmark with your peers, and make sure you stay for drinks and DJs at the end of the day.
Google Data Jam to find the agenda and use the code VOICE to secure a 20% discount on both supplier and practitioner delegate places. See you there.
So how far have you got? What sort of headcount? And obviously we're in quite a nice office here. There are people running around. I mean, how many people and sort of what sort of GWP have you managed to get
Well,
to?
thank you. We've just moved into our new office. There's a few signs and things, not quite neon, but there's some work to be done. Well, it's certainly larger than was planned after 7 years. I'll just say that. We currently employ 15 people, 11 full-time staff, and 9 of whom are underwriters and traders.
That's very impressive that you had a business plan that had a 7th year in it.
Actually, I had 5, but you constantly roll it. So I think after 2 years we were there. I think we can absolutely, on that basis, 9 out of 11 full-time staff on the trading side, we can call ourselves an underwriting-led business. I think that's a much coined phrase that probably is overused. We're underwriting-led. And much like Atrium of old, really, where the people running the company were underwriters, they were traders, had worked their way up, really. So I guess that's part of the reason why I call myself the Chief Underwriting Officer, because
I'm the CEO. Or...
Well, founder, CEO, president, or whatever you want to call yourself. But actually, at the end of the day, it's just a title. I'm here to do a job, which is trade on behalf of the capacity. And I have a handle on every risk that goes through the books.
Is that a higher percentage than you'd have had when you were working as a traditional underwriter on a balance sheet business?
Much higher.
Much higher, right?
Much higher, absolutely.
And that's partly because of the structure? Is that because an MGA, obviously you're going to have someone who's dealing with the FCA, your regulator?
Yes. I mean, we're still an appointed rep, but we are, in the process of applying for our FCA license, and hopefully that comes through soon. We currently are underwriting in the region of 125 to 130 million US dollars gross. So, it's not an insignificant amount for the numbers I've just cited, 11 full-time staff, again, 9 of them trading. And you look at the per capita ratio there, income per capita, it's actually a very healthy number. So, yes, we are efficient and we have to use systems in order to sift and file. And I think systems is what does the heavy lifting, really.
You're an aviation specialist. Why don't you run us through what you actually write? And it's not that mystical, but at the same time, there are classes within aviation. It would be really good to know what exactly they all are and how they all fit together and why something might be a war risk when other people might think it was a hull risk. It's a very specialist area. It's a very niche area. So sometimes it's actually quite mystical in some ways. I think something like hull and liabilities, people get what that is. But some of the other things like AV52 and war risks, they're slightly more esoteric. We only come across them, certainly in my experience of coming across them as a journalist, was always a little bit surprising. I was realizing how ignorant I was of exactly what the coverage of each one was, and how they all work out.
Well, it's a really good question, Mark, because one can get confused with this very easily. And let's face it, the marketplace talks in jargon, GWP, EPI, signing down. What does it mean to the layperson? I call it the mother-in-law test. You're at a drinks party at Christmas and your mother-in-law might have had a couple of sweet sherries and she might say, "What do you do?" At which point, can you explain in 30 seconds something that she can understand and relay to the next person that asks her? And that, for me, is the acid test. Keep things simple. And quite honestly, it can get tricky because there are so many policies and the way, much like the marine market when it excluded war risks, suddenly you've got 2 markets and that then diversifies yet again with call rates into... And you can subset this thing and make it as complicated as you want to. But on the whole, let's simplify it. We insure the aviation sector, and that's the start point. We insure hull and liabilities of the airlines, otherwise termed all risks. So that's the hull of the aircraft and the people in it. And then we've got the third-party damage. So airlines have strict liability to any damage they might cause to buildings or people on the ground.
So you crash into something.
Exactly. So that's the aircraft. Then we've got the third-party damage, and then we've got the airports, the service providers, the manufacturers, and the other subsets that come around, servicing, fueling, the baggage handlers, the catering. So they need insurance as well. They're air sides, and they can do damage to a very high-valued asset or to the people as well.
So you drive a forklift into the side of a jumbo, and that's quite an expensive thing to have done because you've kind of ruined their day, haven't you?
Well, hold that thought because, think Jumbo and Big Mac, because during COVID, the kids were probably serving Big Macs in McDonald's, and now they're driving a forklift truck or a baggage lorry around Heathrow. And are they trained for it? Well, maybe not. And when there's these high-valued assets, $300 to $400 million, they are getting hit by a lot of hanger rash, as they might call it, on the ground. And that is actually causing a lot. And of course, the composites that we now use for aircraft, or commonly, are harder to repair. So the cost of repair of an asset that's been hit by someone in the ballet that goes around this aircraft when it's being ready to fly is costly. So that's the all risks. We've then got, as you mentioned, the war risks, the hull war.
That's what I would say. In the market, you are known as being an expert in that.
Well, it's certainly been my niche, and I've certainly made it my area of focus for maybe 3 decades now. And what is that, and how does it come about? And very simply, for those that don't know, when aviation insurers were losing a lot of money in what was termed the golden age of hijack in the 60s and 70s, and let's face it, that was when Israel and Lebanon, again, I mean, that's quite topical, isn't it? Were having a spat, and they were hijacking aircraft and destroying them on the ground at each other's airports. So insurers basically said, well, we don't want to insure war, malicious, hijack, or anything basically associated with those war risk perils. So they exclude. Now, that's not great for either the operator, the airline, or the bank that might own that asset. So they need cover. Yeah. And in the same way as the maritime market had got a subset market for war risks, the aviators, in excluding, pushed that into the marine market, funnily enough, who said, well, I'm doing war risks for boats, I'll do it for planes as well. And the history relates that in the 60s, the late 60s, that the mariners in the Lloyd's market, who are very good at that sort of specialty risk, 2 flies up a wall, where it's quite hard to relate to what the risk and return rate might be, they took on that war mantle and insured the hull for malicious damage. So everything that was excluded under the all risks policy for malicious war risks, terrorism, hijack, etc., is now a standalone policy called aviation hull war. And then thirdly, we have what's called the excess third party war risk liabilities. Quite a mouthful, that, isn't it?
Yes. And is that also known as AV52?
Excess AVN52. So AVN52 is right. The clause that effectively, people call it all sorts of things, but the correct terminology is AVN, which is the aviation clause short form, and 52 happens to be the number. What is it? It's effectively the right back of war liabilities. So when the fateful day of 9/11 happened and we saw those dreadful images of the 2 planes going into the Twin Towers, it was obviously a shock to the aviation insurers who had all war risk liabilities within their policy. So they exclude the hull, but they didn't exclude war liabilities. On that day, if not soon after.
Was that the war policy kicking in? Or was that
no,
the
it wasn't.
All risks?
No.
That was the all risk policy.
The all risks for the liabilities and the hull war for the value of the asset, the plane. Yeah. And then you've got the third party damage, obviously called
so then buildings. Presumably they excluded at that point.
Well, they then issued 7 days notice to exclude any third party war liabilities going forward. And you effectively, with that, potentially grounded within a week the world's fleet from flying. Now, not a lot of people wanted to fly straight afterwards, but of course planes had a duty to fly people. And when they fly into a large airport, such as LaGuardia or LAX or Heathrow, they will need $1.5 billion of liability limit. The market got to a sum of $50 million post 9/11. And with that, you then had a number of governmental schemes set up where Equitime, Global Time, Eurotime, Homeland Securities Act. So a number of national enactments were made such that mutualization and cover could be afforded to the airlines. But at the same time, the market then started looking commercially to say, well, can we actually put a price on this? And if so, how much? And I think that it's fair to say that there were 2 key insurers at the time. One was GE Francona, who had an association with GCAS, one of the main lessors, and the other was AIG, who had an association with ILFC, the other major lessor at the time. And those 2 effectively were told, well, I think you need to insure these planes. And at that point, $1.25 was the amount put on each passenger's ticket. Not an awful lot, you would think, but it yielded around $3 to $4 billion in premium that year. That's the excess, and that is a continuing standalone market today, excess of the primary liability limit in the all risks, which is around $350 million.
Wow, that's a pretty big market.
It is. I'd say it was bigger from a capacity perspective. There were more players pre-Russia invading Ukraine and pre-events where reinsurers have focused on where they get their best bang for their buck and have probably aligned themselves with hull war as opposed to 52. So there has been a receding of capacity in the excess 52 market in recent years.
So what's the state of the aviation market? As an observer from afar, I always think of it as being quite volatile. Because it's not that big, it doesn't take a huge amount of excess surplus capacity to chase the rates down. And then obviously conversely, it takes only a couple of withdrawals from the market for it to start going back up again. Is that right?
It is right. It's very varied. In fact, I have to just dial back a bit and say general aviation didn't get a mention, which is the light aircraft, the helicopters.
That's the part that I did know a bit about. When I was a broker, we had fleets of Spanish helicopters. Turns out that you use them for all sorts of very dangerous sounding things, mostly, and sort of inspecting power cables or spotting fish in the Pacific,
in air,
putting
possibly.
fires out.
Well, it's certainly a specialist field. And, Hive, we had capacity through our supporter in Arch to write general aviation, but without the right team and without the right expertise, we weren't going to venture into it. So it took us 3 years before we found the right personnel to come in and do that job for us. And now we've got it. Yes, they're very knowledgeable. And whether they're ensuring fish spotting and telegraph pole distribution line, etc., one hopes that more drones will be used for that sort of thing going forward without personnel that costs much. But back to your question on the state of the aviation market, there's a number of people that have gone on record. There was a great report recently posted by Allianz that goes into some depth there, and certainly your listeners might do well to go and seek that out on the internet. I would say that the state of the market is mixed because of the subsets, because of the different classes and the classification that we have. No two markets are the same from a capacity perspective. So the all risks and the all risks from an airline perspective and a GA perspective both have an oversupply of capacity. So notwithstanding the fact that reinsurance costs have gone up and that the fact that arguably planes are now back up in the skies and more events such as I said, hangar rash and the like are causing losses, where we had 2 very good years, I would suggest, during lockdown when the planes were on the ground. Now that they're back up and returning to flight, some of them maybe aren't flying as well as they should. And with that, the overcapacity is still seeing rates reducing in the all risks. The whole war, well, there's enough capacity, but just enough. And there's this obviously question mark. There's been a resurgence in the post-Ukraine invasion where we've obviously seen rates go up in order to make that difference, given the sizable risk and loss there. And the excess avian 52, just about enough capacity, but, enough to get the risks home. And that, I would say, is creeping upwards from a premium perspective.
You mentioned about Russia, Ukraine, and all those claims, which seem horrendously complicated. Certainly, I was glad that I wasn't a day-to-day journalist or being the news editor or having to edit and tell a reporter to go and understand very deeply what seems to be quite a complicated thing. Can you give us a bit of an overview of that, but also what have we learned from that? And how's it affected the market?
Well, a very good question. You will no doubt be aware of the ongoing legal proceedings. For many of your listeners, I'm sure that's the case. And you'll appreciate the sensitivity, and I'm limited as to just how much I can say.
It's frustrating, isn't it? Because we never get the clarity.
Well, I think I can shed some light on what happened maybe, but the scenario that we're talking about is not just Russia invading Ukraine and damage to assets on the ground at the time. The airspace was shut overnight, and with that you have trapped assets, which if they're not destroyed, there's a question as to, are they operational, are they maintained, or are they destroyed? Big questions. And then there was the impending sanctions imposed by the West on Russia. And with that unforeseen that both the banks, the lessors, the financiers of the assets, make no mistake that a vast proportion of the Russian fleet, some 450 or 500 assets, are Western assets, the Airbus and Boeing, and they're leased. And the lessors are American, they're Irish, they're Dubai, they're Chinese. So they're many and varied. And the lessors were effectively told that they had to cessate all leasing arrangements. And with that, obviously, they then can't get their repayment on their asset as the airline would. And not long after, Russia, in various guises, said, we don't want you to fly internationally. Some of the planes had flown internationally and were detained. Some of them were actually returned. There was I think one at Istanbul that had a catering lorry as it was taxiing that pulled up in front of it and basically said, you're not going anywhere.
The bailiffs came out and said,
basically,
sorry, you belong to Bruce.
Repossessed. Well, not me, but the lessor, I'm sure. I think just to kind of highlight what that means, 450 assets overnight, which are in Russia. Now,
that's a lot of value, isn't it?
It's a huge value, 15 billion maybe.
Yeah, right.
We're talking an unprecedented event. The quantum has never been seen before. And, obviously at that point, the lessors say, we feel we've got a loss. So I think what's interesting and what some of your listeners will be aware of is that the war risks, both in the marine market and the aviation market, have got the ability to review the terms and conditions, which we at Hive did very early on behalf of our carriers. We acted on their behalf in issuing notice to review, that's 7 days. And we believe in excluding Russia as an area, as a territory, were off risk from that moment. So there's an awful lot of grey here with jurisdictions, with multifaceted conflicts of interest, where you've got leaders of the slip who have got an all-risk position, a war risk position, an operator. They might be insuring Aeroflot for all risks and war risks. There's 4 different policies at least. And it's hard to think how the excess Avian 52 could be involved in this, and yet the lessors and their lawyers instructed claims on those. And so this thing has got the potential to run, I'm afraid. Obviously, there are court proceedings.
So it sounds like the sort of thing I'm going to be reading about in legal reports in 15 to 20 years' time, if I'm still here.
Well, you asked the question, what lessons have been learned? And I think it's too early to foretell exactly what lessons can be learned, because we're pretty good at licking our wounds and going back and saying, what could we have done better? We're pretty rubbish at foreseeing and foretelling that, but human nature says we learn from our mistakes, if there were any. But I think what is clear is that the aircraft aren't damaged. They continue to operate, whether in Russia or outside of Russia, and that Russia is continuing to negotiate settlements with the lessors to buy these assets. So we remain hopeful that the ongoing conversations with the lessors will find a solution for all parties.
The assets are still there, so that's and I suppose they will need some spare parts, and it might be hard to get them otherwise. And
it certainly is. They're finding ways.
I was looking at your website and you were talking about predictive foresight and something that's one of your USPs, or something that now that you've had this opportunity to build a new business from scratch, this is one of the things that you've decided to do differently and to do better. You mentioned about predictive foresight. What's that? I mean, do you know next week's lottery numbers?
Cunning marketing words, eh? I'd love to say yes to that.
Well, you knew this question was coming, clearly.
Did I? Yes, I might have done. Well, insurers are notoriously good at analysing events of the past and something that's occurred and creating a regression chart of plotting the events and saying what's likely to happen. Where's this hurricane likely to go? Well, hopefully where the last one went, but maybe not. It's a bit like that great cartoon that I saw in one of the insurance rags. I mean, I do enjoy cartoons that are insurance-based, obviously. And it was the CEO going into the modelling department. And this is obviously post a hurricane. And he goes in there and shouts out, "You're all fired." And he comes out and says, they didn't see that coming either. Now, hindsight's a beautiful thing. And we as insurers use predictive technology to try and forecast and foretell. What does that look like from a malicious damage, war risks perspective? Well, it's a really interesting one because as the investment statement goes, past performance is not a guide to future performance, nor a reliable indicator of future results or performance. Now, with that, I would say we partner with a bouquet of very clever people, the intelligence providers. We've done this for many years. I mean, I've done it since the early 90s, really. And their job is to tell us not just what's occurred and what's happening around the world, but most importantly, make predictions and forecast. And as Simon Sowell always said at Exclusive Analysis, turning foresight into insight. And it's that foresight is really the piece that I'm interested in, which is foretelling what might happen next. It's really the knowledge-led underwriting philosophy that's at the heart of Hive's DNA. And that's the bit that was really the start point when I wanted to set something up, was creating the map of exposures, saying pretty much with some accuracy what is on the ground at any one time, at any one airport. Because that's the thing that underwriters are concerned about.
Something listeners can't see, that before we turn the microphones on, Bruce was showing me. I suppose if you've been on one of those websites that shows you where all the planes are, he's got that, but he can zoom in on every plane and tell you what value it is and whether he's on it or not.
Yes, our cunning tool that we call Sentinel. I think there's a bit of a gold rush going on at the moment. It's been done with boats, and let's face it, the vessels on the high seas move at quite a slow pace. The planes are moving at 350 miles an hour. And pinpointing on a map, I think everybody knows who the asset trackers out there are, that there's probably a half a dozen of them. And in fairness, I think we went through about 4 different providers of transponder data. I used to be on a plane looking out of the window, and if I still had 3G on my phone, I could see the registration of the planes next to me. And if it was G hash whatever, and it wasn't on my map, I came back to the guys in the office and said, where is it? It wasn't there. And now we've got a provider of data that has up to the minute data as to the asset's location, and it's using transponder. It's also using satellite data to pinpoint where that thing is in the world. And notwithstanding GPS spoofing, which has become a real bugbear, it's certainly around areas of conflict where they're trying to effectively geofence the drones.
We've been seeing this with the marine market as well, this sort of dark fleets
totally
moving Russian oil. And
Absolutely. It's a really interesting one because for us, using the map is one thing, but then the threat assessment that overlays that. Now, some of the intel providers we have are very data scraping and scraping 200,000 open source points to get what they call pings. These are events, effectively, to try and alert us to what's happening in the world. Now, that's real time and that's what's happening here and now. But actually, I'm interested in, as I said, in the forecasting. And that's the human capital piece, which tries to distill down the politics, the movement of the troops on the ground and the chit-chat and the chatter on the waves, if you like. And some of these people are intensely bright, ex-special forces, ex-government intel.
So you really have got spies everywhere.
We'd like to think that they have. We don't, but we're paying people to do that job for us.
So it's far more human-based, and
the human capital
really know those countries who keep abreast of everything that's going on.
For sure, because it hasn't happened. And I think that's the bit that in a previous life, I would say that we missed probably at least a dozen events which became losses because we had exited stage left. We knew.
Or you knew that the risk was becoming unacceptable.
Well, we questioned, I'll give you an example, in 2003, DHL flying in and out of Baghdad at the time. And you might remember Paris Match were asked to go and video the insurgents airside in the perimeter fence. Now, we knew that there were insurgents inside the perimeter fence by virtue of the intel we were paying for. And the assured was somewhat perturbed and surprised that we had this level of information at the time. We said, well, we think this risk is worth some more money. Well, the market didn't. We effectively walked away from the risk at the time, but 6 weeks later, the aircraft was shot down. Now, it's a great feeling when you get one right. I'm not that Bateman cartoon doing the jig around the loss book when we miss the total loss. But quite honestly, that's the definition of knowledge-led underwriting, using the intel and acting on it.
What's your intel telling you at the moment? I mean, such a volatile and just feels more fluid and more volatile and more dangerous than it has done for a long time, or at least that we are more conscious of the danger. I expect there are lots of times when we felt safe, but we probably were less safe. What are all your spies around the world telling you at the moment? Where should we be looking, particularly, let's say, short term, medium term, long term?
Well, I think it's threading that path through the subjectivity, really, because to make a sweeping statement that it's worse now, is that because we're more cognizant of the threats? Is that because we have better intel sources and the internet makes it widely available to us and it's first item on the news? I'm constantly questioning this, really. Just because there's political violence doesn't mean that our assets at Heathrow behind that secure perimeter are going to be at risk. There could be political violence in Hounslow, and I would hope that they're not firing rockets over the fence at Heathrow. So I think we've got to keep it in context, really. And Mark, you'll remember, as certainly I do, the 80s and 90s in EC3 here, where we were being bombed by the IRA. Now, that wasn't a good look.
And IRA were firing missiles out of the back of small motor vehicles at Downing Street and even at the MI6 headquarters.
And when my cousin, who's a fish farmer in Scotland, visited and stayed with me in London and said, cousin, aren't you worried about the threat of the IRA? I said, oh, no, you've got to go about your daily life. And with that, we were evacuated from Bank Tube Station because of a bomb scare. And I don't think he visited me again after that. So there is a subjectivity, but making sense of it is hard. And that's why we do partner with the experts to hold our hand. I think the world is undeniably more divided than it's been since the Cold War. I think we can make that as a very sweeping statement. And naturally, this is hugely concerning to us, especially when you think of the interconnectivity and reliance we have on other countries for many of the services and even labor force and goods that we enjoy. We've seen examples, just when the blocking of the Suez Canal, which wasn't a war risk event, but suddenly you can't get your wicker chair from Indonesia because it's stuck in the Suez. Not a great thing, but it highlights the interconnectivity that we now have.
What about things like Taiwan, for example? It's there.
It's
obviously
a
risk.
Yeah, for sure.
Does it scare the hell out of you? Or
I wouldn't say scare the hell, no. I think it's a case of understanding. There's rhetoric around it, obviously. Depending on who you ask, you'll get a different answer.
Well, one presumes there must be plenty of demand.
There's obviously demand. I think what's interesting is that our system, Sentinel, not only focuses on the assets that are domiciled there, the Taiwanese airlines, of which there are 3 or 4, but it also looks at who flies there. What are the exposures? And what we've done is, on behalf of our carriers, we've effectively reduced our exposure to the area by some 90% in the past year and a half. So that speaks volumes, really. And I think the market, likewise, there's a limited amount of capacity for that risk. So price definitely is a factor, and that tells you everything you need to know. Undeniably, there's an increased risk. You have to say that. But it disappoints me that I work in a market that's not a spot market. There's undeniably more risk in Lebanon and Israel today, and yet the market isn't charging for that. So you could say, is it really that dynamic that we're charging for war risks, or are we just sitting waiting to react, which is a little bit lame in my opinion?
You're being proactive. It sounds like you're more proactive in the Middle East as well.
We are. We have been. I think part of that is having the conversation with the client. We've had conversations recently with clients, and clearly one can be reassured. Listen, our airlines are not that stupid that they just want to fly into a war zone and lose people and asset. That's not their job. Their job is to keep people safe. They have very good intel themselves, some of them crossing over with our intelligence services as well. And I think it's about a partnership where we work in tandem with the client through the broker.
No airline CEO wants to be the CEO that when a plane's been kidnapped on 200 passengers sitting on the ground in Beirut Airport,
for sure,
surrounded by people with machine guns. It's not a good look. It's not good for the brand, is it?
And yet, conversely, I would say that Ukraine, again, our predictive analysis said that this was a growing threat. We didn't give notice, but a year before the invasion, systematically came off our Ukrainian domiciled fleets. Now, that's a proactive measure that we took in order to do the right thing by the capacity for whom we underwrite. Now, I think we were probably alone in the market in doing so. And at the time, just a week before, I was on a call with EASA and Eurocontrol, who were blaming underwriters for not wanting to insure assets in the skies. They went a little bit quiet when I said, well, you're not going to be writing the checkout when the assets are stuck on the ground, when the airspace is shut. And guess what happened a week later?
You mentioned about greater interconnectivity everywhere. We're obviously in trading systems. And of course, now we've got communication systems. Of course, you're using very sophisticated communication systems, but so are the airlines. Given that even aeroplanes are connected to the internet these days, is everything a cyber risk? And with that, we've had this interesting event in the cyber market, the CrowdStrike event. Did the aviation market learning anything new out of that? Or of learning of some new exposure or worrying about something new?
Interconnectivity discussed. I'm a big fan of developing systems such that's going back to the kind of use of systems, and I'll come on to the CrowdStrike question as well. But the use of systems, I think, to do the heavy lifting is definitely the answer. And interconnectivity and understanding of our clients through sharing of data and information is really key. I think Warren Buffett once said that if you don't find a way of making money while you're asleep, you'll work until you die. Well, systems are going to be the way of doing that for me in my thought process. So what's the best application? Well, for us, we've identified threats and opportunity, and we have 10 million rows of data coming every day from that flight tracker, from the transponder data, which goes into a data warehouse. We're not at this point, I hold my hand up, but we are going to very soon be using AI to point us to patterns and threats, and it's going to start talking to us basically about what the map is doing. So that's really exciting. And what it did...
It's just going to be saying, I've noticed something interesting happening. Have you noticed that more people are going to San Diego?
Why should a person be scraping that and looking for something? It should be spotting the anomalies and telling us. And I think that's the key to this thing. But, CrowdStrike was an interesting thing because our thoughts of cyber are that guy in the hood with the black kind of matrix floating down behind him. But actually, in reality, cyber is non-malicious as well. It's the guy that trips over the plug and pulls out the BA system that downs the aircraft for 2 days, as was the case in 2017. And I was stuck at Heathrow for 5 hours. But cyber can be malicious. It can be non-malicious. CrowdStrike was non-malicious. And our system actually identified the change in patterns at airports and how many assets were on the ground at these airports as a result of CrowdStrike. Now, the likes of Southwest weren't affected because they're on Windows 90.
So that increases your ground accumulation.
Yeah, totally. Absolutely. And, hopefully it's airports where there isn't a major threat. But that was the case, certainly. Because CrowdStrike was an event that affected aviation, planes were grounded, passengers were stuck, and it just wasn't an ideal scenario. And I think when you look at that, were there any losses to the aviation insurance market? I don't think there could be or would be, because it's an uninsured event. It's the event where ticket sales, air miles systems, the things that people really try and hack, like a bank, that's where your malicious hackers would really target. And to my mind, I'd have to defer to the experts in the cyber market to understand
day-to-day enterprise risk for an airline.
Well, totally. But, I would just say that for all of the thought process on how we can get better because of this interconnectivity and understanding it and where the threats lie, I'm coming right back to basics and saying that the biggest frustration to me, especially during lockdown when I was sitting at home receiving an email from a broker with a PDF, which I then have to somehow chunk into our system. Now, how archaic is that in 2020 and even 2024?
We know the AI can do that, certainly.
Well, of course.
I had Kate Markham on the show. The Hiscox are doing that with their terror submissions.
Totally. And a lot of markets have embraced the likes of PPL and Whitespace and other digital trading platforms. The aviators are really slow to it. Now, I'm not sure of the reason for that, because they come from the same broking houses that have the property and the terror and the other people that are transacting through these portals. But the day-to-day is still...
You should be early adopters of all these things, I would say.
Well, we have been signed up to PPL and Whitespace since day one. Our brokers need to join that link if that pipe isn't connected. So
that's interesting you say that, because of course it is, as a broker-led market, if the broker's not using it, then
it's the hand that feeds.
So they need to be embracing it.
They really need to be embracing it. And I think that's one thing that I would add. And the other is, now I have oversight of all those things that I never previously have oversight of. The money, the transaction, the reconciliation.
In terms of what you think AI should be doing in the aviation insurance market, this is mainly that you've got tons of data. Do you think that's the ideal opportunity for you?
I would say it really isn't about us trying to harness all of that data. It's trying to identify the data that really matters.
Yeah.
So for us, planes, where are they? How much are they? Well, the difference between an agreed insured value and the fair market value can be 3 or 4 times. So, we're looking at the differential between fair market value and agreed value. We're looking at how many are on the ground at one time. We're even looking at the altitude that one might fly over a war zone. These are things that can make a difference to us and to our assureds. So listen, this isn't Sheila's Wheels where we're basically saying you were driving 30 in a 20 mile an hour zone. We don't want to use it for that. We do want to use it so that it can steer us and our portfolio.
So you don't want to be pinging up on the pilot's cockpit saying, sorry, Bruce says you need to go a bit higher because you need to get out of the range of the missiles. And I know, I'm sorry, that's going to cost you more fuel on this journey, but
And we know that's happened, right? So, but I think at the end of the day, it is where we can use it to make a difference. And there is so much technology. That is the benefit, right, of an MGA, is we have some carriers, without getting too personal, who are some of the larger companies out there who said that they couldn't develop a system like ours in 10 years. Now, why would that be? Maybe because the aviation department wouldn't get the budget, the procurement, the staff, the people to just fix that, make it happen. And I liken the MGA, or certainly Hive, to that speedboat in the harbour going around the super tankers that are sitting at anchor. We can nip around them and be agile.
And it's the only thing you do, isn't it? So, of course, if you can find a better way of tracking airline fleets and their values and the disparities between those values and their agreed values and their market values, then that's really helpful. That's where you're adding the value, and that's why they can just get Bruce to do the underwriting for them instead of having to do it themselves.
Well, Bruce's great team are even better.
And I suppose I'm going on like this because this growth in the MGA space, is it right to say it's because it's the best way of doing things? Particularly for small specialist, well, aviation's not small, but let's say relatively niche, incredibly specialist coverages. Aviation has always had consortia, and we go back to the Westminster Aviation Group or the British, BAIG and WAIG. And I suppose because it's always been a class where it must have been very hard to build a critical mass in order to have a big enough underwriting team, a big enough claims team, is there really enough premium for everyone to have a big enough underwriting team and a big enough claims team? And you think, well, what if my underwriting team suddenly leaves? I've got this terrible legacy. It would be far easier to have a relationship with someone who all they do is aviation, and I just take a 10% share.
Well, I mean, you're exactly right. If you look around...
Do you think there's a secular change in the way that the market's working? Because you mentioned Clive Washburn earlier. Again, I've had him on the show. He's doing the same as you. I have Richard Brindle on the show. He's done the same thing as well. So do you think this is a secular change, like a permanent change in the structure of the market, particularly for specialist risk?
Yes, the aviation market is flooded with MGAs. You mentioned Wag and Bag, and of course they merged with Associated Aviation, becoming Global Aerospace, one of the largest MGUs out there. And they are a large player in our marketplace in the aviation world. So there are multiple huge facets of aviation MGAs out there. And not just focusing on aviation, but I would say, going back to your question around whether there's a secular shift towards MGAs, I would say absolutely. Now, you're preaching to the choir, obviously, because I've done it and I know what it's like on the other side. But I constantly talk to other teams, non-aviation. Hive is looking to grow and expand into other specialty lines of business. So we don't want to just be aviation going forward, and we will grow and use our technology and our platforms for other things. So counting planes at 350 miles an hour, we've done that. Counting buildings that are static is actually child's play by comparison.
Well, these days, of course, you think buildings are static, but of course it's everything else is moving around
them.
The
BI and the contingent BI.
The wind is blowing around it so much faster than it used to, and wildfires are approaching them
and the interconnectivity of that contingent BI, obviously. Yes. But I think what's interesting is that, I would say this to you, no slight intended to anyone, but MGAs now fill the void that Lloyd's has created, basically. And just to be clear, our alignment with profits as underwriters, so we earn through profit commission, and I know you've had other MGA owners on here who have profit commission focus. So we are very much aligned with our carriers, the insurers that give us their pen, through profit-related pay. So we have to basically return a profit to them and not make a loss. So it's personal. And the interesting thing is that each and every one of our underwriters now, because their pay and their bonuses and their reward is profit-related, they're closer to the risk than they ever were in any of their syndicates or their carriers, which they couldn't calculate because they're such big entities that they can't really calculate what their own profitability and how that feeds into their own reward. Precious few could do that. So much like an old syndicate where the active underwriter used to have the largest share by way of being a member at Lloyd's, an MGA such as Hive has got skin in the game where we're actually that close to the risk that it's personal. So the first thing I would say is that Lloyd's now doesn't allow for the entrepreneurial, ambitious, profitable underwriter to set up. Lloyd's 2 decades ago, no doubt I would have been looking at setting up a Lloyd's syndicate or a managing agency had it been 2 decades ago. However, it now requires significant infrastructure, staffing, backing, incubation, investment, all of those things that you don't need as an MGA. So the flight to MGAs is not just that as a focus, but actually also, you'll know that many MGAs have been kind of put into that intermediary box where the intermediaries are all kind of big fish eats little fish and there's lots of them going around. Well, the MGAs that's caught on as well. And so people are switching into MGAs, a number of them, because they see it as
you're not a capital intensive business and people buy
trading early.
Yeah, and you can be bought on multiples of EBITDA by people who love doing that.
I think there's a certain freedom. I think you're closer to the risk, as I said, and the reward of that. So it's personal. Would we eat our own cooking even more? Yes. We have certainly looked at the captive option, the syndicate in a box option, the syndicate, the full stack carrier. Maybe we got it right first time round. Richard Brindle and Fidelis have flipped from being a carrier full stack to an MGU. So maybe we got it right first time.
Yes, I think it's fair that Lloyd's listened to that criticism that you've now just voiced and have reacted and produced lots of regulatory lighter structures like the syndicate in the box, things that you've just mentioned. They're not tempting in any way?
I'd like to think I was one of the forerunners that brought it about, actually. You and I might have had a conversation some time ago around this gently. But if I'm honest, I looked at the cost of it. We certainly dabbled and we investigated it. And I guess the interesting question to Lloyd's when posed, when they said you get the chain of security, you get the licenses, you get the global marketing background of Lloyd's and the fact that we have this incredible reputation and history, And when I passed over my card to the individual in question, which had Lloyd's cover holder on it, I said, I think that's all three, isn't it? Anything else I get? And he said, I'll have to come back to you. Now, that to me wasn't the answer I was looking for.
I think you get investment income.
Well, there we go. And I get access to names. If we wanted investment or capital, we've got some very good carriers backing us.
What do you think? There are new structures still to be? There are ways of accessing these things.
I wouldn't dispel it. I would never rule it out. We certainly have it always under review, but at this stage, no plans.
So you mentioned before about expansion plans. Sounds really interesting. So you're an aviation MGA at the moment. At what point you might not be just an aviation MGA, you were hinting at earlier?
I'd like to be able to tell you. I'm not in a position where I can at this stage, but we have some ongoing conversations with some incredibly talented underwriting teams. And that's the bit that I guess really excites me. It's all, you always think about what's the get out of bed moment. And for me, it's drawing that next team into Hive. And to be honest with you, yes, we are aviators. And I think a lot of people see that as both my background, even though in the past I did marine, I did energy, offshore oil and gas, I did political violence, political risks, even a bit of terrorism. So, I've done all of these things in my years at Atrium. And it's not rocket science, I'm going to say, but actually there's some very, very talented specialists in those fields who, if they're looking at setting up an MGA, if they're thinking about how do I do this, we'd love to have a chat. Clearly it's off the record and clearly it's very discreet. But we've got 3 or 4 of those ongoing at the moment. And I would love to be able to sit here and say to you what that is at this stage, but discretion says I can't.
So we'll watch this space. But yes, you're more or less agnostic about what kind of classes of business these might be. It just sounds like if you get the right sort of people interested, and these are people I presume that you've known for a long time.
Some of them are new, actually. We've got other staff here who know people that I don't. So those conversations are really great. I think part of what might be a draw to us and where we're different is we are independent. We are wholly owned. And I guess I'm really proud of the fact that all staff are aligned, not just through profit share, but Hive is 100% owned by staff.
Oh, that's great. So that's the sort of thing, yes, these can be new equity partners in with you.
That's the deal.
And I suppose, yes, that could be very attractive because they don't have all that startup costs and that sort of running around, being a nomad around the city, which of course I'm wholly in sympathy with you, Bruce, but I'm still a nomad. So I don't know if you describe yourself as an entrepreneur, because it was quite interesting when I asked you how you got the idea for Hive. Often most people would say, I've always wanted to run my own business. I was really frustrated. But you didn't sound like you were. So how would you describe yourself? What sort of entrepreneur are you? And I always find that, well, there are at least 2 types of entrepreneurs. There's probably as many types of entrepreneurs as there are entrepreneurs. But the 2 main types that I categorize are the ones who are sort of name above the door, I call them. Entrepreneurs who want to build a business, but also, these days they don't tend to have their name above the door. They tend to have a nice brand name like Hive that makes a lot of sense. Better for marketing purposes and having websites and things. It's not just called Bruce Carman and others, like it might have been 50 years ago.
Do you know why it's called Hive, by the way?
Well, how about interconnected?
No, not like honey. Do. Well,
and sting in the tail.
And cells, when you look at the logo, which has got the cells.
Hive Mind.
Hive Mind, that's our warehouse, funnily enough, yes. The Hive Mind. So there's a number. The hexagon's actually the strongest occurring natural format in nature. So, and it fits together very neatly, as you can see in the logo. But actually, it was beyond that. Before that, it was going to be hexagon underwriting, which is a bit of a mouthful. And there's polygon, I think, the dead parrot that's gone before. But hexagon and Hive really was born out of the fact that I was talking to another underwriter when I was trying to set it up, whose name began with B. And it was B and Bruce, 2 Bs. And that's where it generally came from. But to your question, what sort of an entrepreneur do I see myself as an entrepreneur? No, I don't. Is the short answer.
I'm going to build this thing, and my grandchildren will be able to inherit it.
No, I'm one that certainly suffers from the imposter syndrome. It's fair to say. And the start point for the idea was obviously the technology, the thought leadership in that, the fact that other people weren't devoting much time and effort to spotting where the planes were and how much they were and what the threats were to them. So just that as an idea, and whether I could get a job at another firm doing that and rolling in other crisis management lines of business. But for me, I think it was the nurturing of a team and developing them. We're proud of the fact that we are doing the right thing culturally. We're doing the right thing professionally by way of training. We are bringing on, there's a talent gap that's constantly spoken about, and Caroline Magstaff will tell you that at Invita, I'm sure. LMG are looking at how, even Boston Consulting, I think, was looking at that donut that the market suffers from, and how do we get talent in, and how do we get on the milk round as opposed to the banks? And to be honest with you, having a proper work experience program, having proper training for people when they come in so that we develop people. I'm really proud. We call them homegrown. They're not cabbages, they're not vegetables, but they are homegrown, home nurtured. They've done their CII, they've done the right thing. And we're also accredited, very proud of our accreditation with the CII as a chartered underwriting agent. And, why have we done that? Because we want to be seen, not just to have the Corgi gas fitter certificate on the back of the van. We want to be seen to be doing the right thing, even when no one's looking. And that's what it's all about, really, is the culture's the right thing. So that's the sort of thing that gets me out of bed. And again, that's the pride in what we do. And if we get the basis, and we've got great foundations on which to build now. We've built an excellent company with incredible systems, with incredible people, with incredible culture. And I think, to me, that's far better than a name above a door or any legacy you might talk about.
Well, the other type of entrepreneur, these are the sort of two extremes of the spectrum, are so the one who would never, ever sell over my dead body, that I was describing that name above the door type. But also there's also the entrepreneur who loves new ideas and testing them out and proving them. But once they've proven them, they, not say they get bored, but they find another idea. They're very happy to move on to say, I want a new challenge now. You don't sound like you're that either.
Jury's out, actually. I look at some of the greats, some of whom have been on your show and some of whom have been mentioned here. And there are some people who have developed some incredible companies in our marketplace. They've built mega companies, some with their name above the door or on the plaque. And I think about a half a dozen of the really good, and I'm thinking about Lloyd syndicates, and I'm thinking about some of the companies. Most of the people will tell you they've had their company stolen from them. It's an interesting point. When you look at it, they've either been kicked out, summarily booted out, and they've gone off and they've started another one. Now, that's not for money. Is it power? Is it position? Is it enjoyment? It's a combination of many things, but it's probably not money, is what I would say. And I think the drive that really draws us is the key. And what is that drive? I think it is constantly up for debate and discussion. Money isn't the focus here. I think building something that one can be proud of, which is a team game, it really is. It's not about me. I can literally play the Pied Piper and tell people how we think it should work. But actually, they always say employ people, brighten yourself. And I find that thing really easy. So I found it very easy to date. So I think, for me, I wouldn't ever discount the thought of partnering with somebody or M&A, whether we buy somebody. I wouldn't discount that because that might accelerate our growth, where hitherto our growth has been organic, you could say, because it's basically been on plan and it's been ahead of plan. We've grown in 7 years, 70% compound growth. So that's a phenomenal, and some of that's by virtue of circumstances.
Is that growth continuing, this sort of size now?
It was never forecast at that pace and hard to continue at that pace. And I don't think that should be our focus. And I don't have a destination, as you can probably tell in my voice. I don't have a destination in mind. I've got waypoints and stations that we want to hit.
Yeah, there's not a sort of, when do I get to buy my own jumbo jet rather than insuring other people's?
None of that.
Bruce, I was looking at time and thinking we've been talking for a long time. So unless there's anything else, I think we've run through pretty much all the questions I had, which is probably slightly too many. But I've really enjoyed spending some time with you. It's been quite intense.
Mark, a pleasure. Thank you very much.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.